Have you ever wondered how to start investing? Well, you're not alone. Investing might seem like a daunting endeavor, but it's really not as complicated as it might appear. In essence, investing is about allocating your money in different ways, like financial schemes, shares, or property, with the hope of seeing a return. It's about taking your hard-earned cash and making it work for you. Imagine it as a seed. You plant it, nurture it, and over time, it grows into a tree. That's exactly what happens when you invest. Your money, the seed, is planted into an investment, and with time and patience, it can flourish into a financial tree bearing the fruits of your efforts. Investing is not just for the wealthy. It's for anyone who dreams of a financially secure future. So are you ready to take the plunge? Now that you're intrigued, let's dive into the fascinating world of investing. Why should you consider investing, you might ask? Well, let's dive into it. Investing is a crucial step towards securing your financial future. It's like planting a seed today and watching it grow into a mighty tree over time, providing shade and fruits. One of the key benefits of investing is the potential for high returns. When you invest, your money works for you, earning more money and expanding your wealth. It's like having a team of tiny, tireless workers who are always on the job, growing your wealth one penny at a time. Investing also helps you beat inflation. You see, money kept under the mattress or in a basic savings account loses value over time due to inflation. But when you invest, your money could grow at a rate that outpaces inflation, thereby preserving, even boosting your purchasing power. So, investing isn't just about making more money, it's about safeguarding your financial future and building wealth over time. So, are you ready to get on board the investment train? Before we jump into the how, let's talk about the risk in investing. Now, every investment carries some level of risk. Think of risk as the possibility that the actual returns on your investment might be different from the expected returns. Sometimes you may earn more than expected, and other times you may earn less or even lose money. The interesting thing about risk is that it's intrinsically linked to returns. Typically, investments with higher potential returns are associated with higher risk. For instance, stocks can provide substantial returns, but they also come with a high level of risk. On the other hand, bonds are generally considered lower-risk investments, but their returns are usually lower as well. This is where the concept of risk tolerance comes into play. It's about how much risk you're comfortable taking on in pursuit of potential returns. The key is to strike a balance that suits your financial goals and comfort level. Remember, understanding risk is crucial before you start investing. Now, let's explore the different places you can invest your money. First up, we have stocks. Stocks represent ownership in a company. When you buy a stock, you're purchasing a small piece of that company. Stocks have the potential for high returns, but they also come with higher risk. You see, the value of a stock can fluctuate wildly from day to day. So you might end up making a lot of money, or you might lose a significant portion of your investment. Next, we have bonds. Bonds are like IOUs. When you buy a bond, you're essentially lending money to a company or the government. In return, you receive periodic interest payments and the return of the bond's face value when it matures. Bonds are considered to be less risky than stocks, but they also typically offer lower returns. Then, there are mutual funds. A mutual fund is a pool of money from many investors that is used to buy a diversified portfolio of stocks, bonds, or other assets. Mutual funds can be a great way for beginners to get started with investing because they offer diversification and professional management. However, they do come with fees and can still be subject to market risk. Lastly, we have real estate. Real estate investing involves buying property for the purpose of generating income, either through rental income or through buying and selling for a profit. Real estate can be a good way to diversify your investment portfolio, and it can provide a steady income stream. But keep in mind, real estate also comes with its own set of risks, including market fluctuations and property maintenance costs. Each of these investment options has its own set of potential benefits and risks. The right choice for you will depend on your individual financial goals, your risk tolerance, and your investment timeline. Remember, diversification is key when choosing your investment options. It's like the old saying goes, don't put all your eggs in one basket. Spreading your investments across different types of assets can help manage risk and potentially increase your chances of achieving your financial goals. All right, time for the main event, how to start investing. Here's your step-by-step guide to get started. Step 1, choose your investment platform. This is where you'll be making your investments. There are many platforms available, each with its own set of features. so it's important to choose one that suits your needs. Some popular options include brokerages like Fidelity or Charles Schwab, or robo-advisors like Betterment or Wealthfront. You could also consider using an investment app, such as Robinhood or Acorns, especially if you're interested in a mobile-first experience. Step 2. Decide on your investment strategy. This is where you determine what kind of investor you want to be. Do you want to be a passive investor, someone who invests in broad market index funds and lets the market do its thing? Or do you want to be an active investor, someone who takes a more hands-on approach, picking individual stocks and timing the market? Each strategy has its pros and cons, so it's key to research and understand what fits you best. Step 3. Make your first investment. This might seem daunting, but remember, you don't need to have a fortune to start. Many investment platforms allow you to start with as little as $50. The important thing is to make that first step. When you're ready, log into your chosen platform, find the investment you're interested in, and hit the buy button. Remember, investing is a long-term game. The key is to start early, be consistent, and let the magic of compounding do its work. And above all, always invest within your means and never invest money you can't afford to lose. Of course, this is just the tip of the iceberg. There's a wealth of information out there about investing, including different investment strategies, understanding market trends, and so much more. And there you have it, the basics of how to start investing. Now, where can you start your investment journey? This is a question that may be on your mind right now. Fortunately, there are a number of investment platforms that are particularly suitable for beginners. These platforms have been designed with user-friendliness in mind, and they offer a range of tools and resources to help you get started. Let's begin with Robinhood. This platform is known for its commission-free trades, which means that you can buy and sell stocks without having to pay a fee. This is a great feature for beginners, as it allows you to experiment with different investments without having to worry about hefty transaction costs. Plus, Robinhood offers a sleek and intuitive user interface, making it easy for you to navigate the world of investing. Next up is E-Trade, also provides a plethora of educational resources, so you can learn as you invest. It's a bit more complex than Robinhood, but it's a fantastic choice if you're ready to dive deeper into the world of investing. Lastly, there's Vanguard. This platform is renowned for its low-cost index funds and ETFs. If you're interested in a more passive approach to investing, Vanguard might be the platform for you. It's a bit more traditional compared to the other two, but it's highly respected in the investment community for its commitment to low fees and long-term investment strategies. It's important to remember that every investment platform has its strengths and weaknesses, and what works best for you will depend on your individual needs and goals. So take some time to explore these platforms and see which one feels like the right fit for you. These platforms can be a great starting point for your investment journey. Whether you choose Robinhood, Trade, Vanguard, or another platform entirely, the most important thing is that you're taking the first step towards building your financial future. We've covered a lot today, haven't we? We've journeyed through the fascinating world of investing, understanding why it's such a crucial step towards financial freedom. We've also tackled the concept of risk, learning that it's not something to fear, but rather something to manage and even leverage to our advantage. We've explored a variety of investment options, highlighting the importance of diversification. From stocks to bonds, from mutual funds to real estate, we've seen that there's a whole world of opportunities out there. And we've walked step by step on how to start investing, demonstrating that it's not as daunting as it may seem. We've even dived into some recommended investment platforms, showing that technology can be a powerful ally in this journey. Remember, investing is not a sprint, it's a marathon, and with patience, knowledge, and the right tools, we can all cross the finish line. Please subscribe for daily content on financial life hacks, and don't forget to like and leave a comment. Thank you all, and let's get wealthy together.